the year has been completed. We've just done our year end. We we just finished completing our final adjusting entries. We've finished our final adjusted trial balance. We've produced our income statement for the whole year, as well as our balance sheet. So we're done. However, we have a little bit of work left before we start our next year. You see, before we can begin our next year, all of these accounts that are in the income statement, they need to be brought back to zero. Because we need to reflect how much money we're going to make or lose in the next year. Kind of like when you take a cab ride, after you've paid the cab driver, they've got to reset their meter to zero. You see, the money's been exchanged and the new person no longer owes them anything. So it's a brand new, fresh start. So much like the cab driver who has to reset his meter to zero to reflect what's about to happen, we need to do the same. Now, there's a process, of course, to do this, and they're called closing entries. That's the topic of this particular lesson. First, we need to identify which accounts need to be brought to zero. And those are simply our temporary accounts, we call them, and they deal with drawings, revenue, and expenses. The three accounts that affect capital. Straightforward. So what we need to do after our books are completed, after all of our financial statements have been done, we need to identify those accounts and we need to bring them to zero. Now there are three separate journal entries that you should use. One for drawings, one for revenues, and one for expenses, because all three need to be brought to zero separately. And you bring them to zero by doing the opposite to the capital account. So we're going to start here with drawings. This was the first on my list. We have a debit balance of 500. So we need to credit drawings 500 and do the opposite to capital. So we're going to credit capital. We're going to debit, capital 500. Next in line is revenue. So here we have $10,600 in revenue. We need to bring that to zero, and the only way to do that is we take this credit, okay, and we debit it, and we credit capital. So we do the opposite. So we need to get rid of the credit, so we need to debit it. So we're doing the opposite to each account in order to bring it to zero, which makes sense. So if I want to bring salary expense, if I want to bring this debit to zero, I need to credit salary expenses by $5,200, which is what I'm doing here. I need to credit advertising supplies expenses, which is what I'm doing here. See, I'm putting all my expenses together in one journal entry just to save myself some work, okay? Because we're going to have to post all this to our general ledger after, and rather than post all of them at one at a time, we're going to take all our expenses together, and we're going to find the total of all our expenses here, find out what that total is, and it's 7758. I'm simply going to take that total and bring it there. So we've done the opposite, okay, to each account in order to bring it to zero. In doing so, our capital has changed, okay? Here it's gone down, here it's gone up, and here it's gone down. Okay? Now, I know that before I start my next year, all of these things, drawings, revenue, expenses, they've got to go. They've got to be brought to zero. Now, when I hit delete here, I'm not going to get a balance. It's not balancing. Okay? I'm going to show you why it's not balancing, of course, is because our capital either went up or went down at the end of this year. So here I'm going to do a little formula that's just going to reflect what happened last year. So here with our drawings, of course, our capital went down. With revenue, it went up. So I'll start with the up. I'll say, okay, first we got this. It went up by 10,600. But total drawings brought capital down by 500, and it also brought it down here. The expenses brought it down by that amount, and I'm going to hit enter. So now capital went up by 2342. So if I plug this into this, which is our beginning trial balance for the next year, I now have a formula which is equal what we had the year before plus 2342, a little error here. That was supposed to be a plus. There we go. And now we have balance. So we have a trial balance to start the next year, which balances, great, but also where drawings, revenue, and expenses are brought back to zero. So the steps: identify the accounts that need to be brought to zero: drawings, revenue, and all expenses. And with 3 separate journal entries, bring first drawings to zero, okay, by debiting capital, bring revenue to zero by crediting capital, and bring expenses to zero by debiting to capital. Find out what the net effect was to capital, whether it was a minus or a plus. Bring that into your next trial balance, and you're now ready to start the next year with a clean slate.